Hello and good morning, listeners. This is Almus Market Mornings with Shikhar Garg, your daily dose of global financial update. And we begin the festive week with some strength for rupee against the dollar and also a few other events lined up. China sets their growth targets around 5% for the year, also keeping any large stimulus to ignite the already limited any stimulus limited to ignite the already consumption driven economy. ECB policy pioneer Omar warns of the possible incoming inflation shocks, for which acting early was the best approach, as he mentioned, but ECB missed that. We also have a few other events lined up with the Australian Central Bank meeting tomorrow and the Fed governor's testimony this week. But what's more intriguing is the kind of strength we've seen in the last 2 days of the week with respect to INR against the dollar. So, JK, I'd like to know more about what led to this strength in INR, as well as what should we be expecting in the financial markets.
Yeah, good morning. So yes, INR strength has been definitely in the limelight because for long we have been trading in a very tight range, and uh, I think as usual, what happens is that when there is a big flow that comes in, and if there is no bidding from the oil companies or the PSU banks, it has a downward pressure on the USD INR, particularly so when currently the market is fairly hedged for importers, but exporters are somewhat modestly hedged because of the low premiums that is attracting to them. So we had the technical break at 82.40, and that follow through was quite big on Friday. Also, the PMI data that came on that day, the services PMI at a 12-year high, was also another boost, whereas the dollar index, somewhat weakening, and the beginnings of a bit of retracement in the yields. All of these put together added to rupee strength. Going forward, rupee, I technically good support at 81.50 and 81.70 as well. We have a holiday coming up tomorrow, local holiday, and the that will also be the day on which Powell will deliver his first part of his testimony. So market may not dare take the dollar rupee too low, and we may be slightly in a range between 81.60 and 82. Uh, there will be more sellers on upticks, but eventually, I think what the central bank does, whether he prefers or lets the rupee to strengthen more, or whether they would like to rebuild their reserves, which they have spent when the dollar rupee was looking to break higher, is the key. I think 81.60, 82 should hold for today, ideally. Yeah, but on the overall global market itself, the last week was quite a volatile week. Yields and dollar rallied initially, and on the Friday, it was retraced to some extent. ISM services was the only major report on Friday, which came stronger than expected, but market preferred to look at the lower prices paid component, and that led to moderation in the yields. 10-year yields had a sojourn above 4%. That's a temporary, foray into the, but then it closed at 3.95%, 11 pips down on Friday itself. At the same time, 2-year note touched the highest level since 2007. The entire treasury complex, 1-month bills to 30-year bonds traded north of 4% on Friday. A lot, flowed from the yield move that dollar weakened across the board, and we had a big rally in the stocks as well. S&P 500 1.6% up. Then Nasdaq was good 2% up. So this was coming from the yields, and then the dollar itself weakened, more notably against the yen, which is now trading at 135.70. Was at 136.70 on Friday. Euro once again up above 1.0630, but the strong resistance lies at 1.0660. And considering the weightage of the events that are coming up, testimony, then non-farm payroll, inflation data next week, to be followed later by the FOMC meet. I think markets would prefer to be in a range between 103.50, 105.50 for the dollar index. While most of the Fed members are adopting the same tone of higher for longer, Richmond Fed President Barkin stood out, calling for a 5.5 to 5.75 target range for the Fed rate. Perhaps the most hawkish call of them all. In fact, ECB officials have also been towing the line of Fed on higher for longer. And Lagarde said over the weekend, I can't tell you how high the rates will go, but I know they will be higher than they are now, and still have more work to do on inflation. And as I said, China targeting GDP of 5% was slightly disappointing to the market, who were expecting 6%, and they are also likely to have a higher fiscal deficit for this year. And these things have led to a little bit of selling of yuan against the dollar, but nothing much. I think more importantly, we should look at how China bounces. Yes, as I said, next week, or rather this week, is going to be a very busy week. On the Powell testimony, members are likely to grill him on his earlier February assertion that we are in very early stages of disinflation, after which actually job growth and consumer spending, all of them came very strong. So we'll have to see how Powell manages his tone on these questions. Then the Labor Department's release of jobs report on Friday expected to show once again 200,000, and last month also similar expectations. But perhaps many people expect that the seasonal adjustments were behind the big 5,17,000 increase last month. So this month it may actually moderate more. Then Bank of Japan meeting, Kuroda's last meeting, and some yen hawks rather expect that Kuroda might tweak the policy a bit this meeting, just to make it easier, or make Ueda breathe easier when he takes over on April 8th. So that's something which probably be leading the dollar yen a bit lower. As you said, I think Australian Central Bank expected to hike rate by another 0.25%. We had another melt-up in the cryptos in the last week, and the origin of this latest crisis is the Silvergate Capital. The San Diego branch is considered to be the crypto bank, and it's one of the few banks in the US that can facilitate real-time cash transfers among the crypto firms. The firm announced that it needed time to review its books and adjust its 2022 earnings, and I think that had an impact on most of the cryptocurrencies, on the radar. So this was something that reminded that we're still having one segment of the market which is under stress as well. Some good news on the Indian side is also that a report says that as many as 49 Ostro accounts have been opened by Indian banks for rupee trade, and that includes Russia, Mauritius, Sri Lanka, Malaysia, Myanmar, Singapore, Israel, and Germany, quite a few large countries. So perhaps if we are in a sustained strengthening phase for the rupee, that is when these exporters from other countries would like to be in a rupee denominated invoicing. But these will be dynamic, I think, as the view goes on the currency and the economy. I think there will be a more consistent approach to this policy. All in all, a very active week ahead, although for Mumbai traders, it's going to be a day of activity followed by holy celebrations. Thank you.
Okay, JK, that's great. And yes, 49 Vostro accounts is quite an interesting number to watch out for, and an interesting update on the rupee trade side. But one more thing that we should be looking out for is the imbalance between the nations with respect to trade, which can also affect the affection with which this particular idea of trading in INR would be taken, or how accommodative will these nations be when it comes to trading in INR. Other than that, folks, as JK mentioned, the INR strength was also related to some bit of flows coming in, along with the lack of oilers and central bank to support the INR strength against the dollar. But what needs to be seen is whether the central bank will come in again to build their reserves, or will they let this particular move to play out. But as JK mentioned, for the coming 2-3 days, with the events lined up, there is possible that there may not be a significant move on the INR strength side, at least for a day or two. But on the global side, if we have to talk about, yes, China is likely to have a higher fiscal deficit. But what's taking a lot more prominence is the higher for longer narrative. Initially, it was just being held for US and a few other nations nearby, but I think ECB is joining the pack with the commentaries from Lagarde, as JK mentioned, being in that particular narration only. It's this higher for longer theme which has also brought in some bit of moderation in the yields, along with some data releases last week. But all in all, there's good volatility among currencies across the board. So, folks, I think these are the critical times where risk management is of primary requirement. I hope you guys continue to manage your risk. That's it for today, and we shall come back again on Wednesday with another round of update. Till then, happy Holi, guys. Have a good festive period. Thank you so much for listening.